Anna Versace. I'm an anchor from Bloomberg Television. And as our wonderful MC just alluded to, you're getting two for the price of one because I'm doing this panel and then another panel right afterwards. So strap yourselves in for an hour. We've got a half an hour chat about private equity, and then we're going to be talking about investment opportunities in Africa. But for the sake of this panel, I'm really excited about what we're going to be talking about, because it is very much about the trends in the private equity space in the MENA region. And just to give you a bit of, I guess, global color before we dive into some of the specifics, I was looking at PitchBook data this morning. And, you know, if you look at how the global PE market has done over the course of the last 5 years, it's sort of been a bit up and down. So 2021 was a record year in terms of deal volumes, in terms of transactions done. And of course, you will remember back in 2021, the world was flush with liquidity. We were in a low interest rate environment. And of course, that did change in 2022, 2023. Subsequently, you saw withdrawal of liquidity, tighter monetary conditions, interest rates started going up, and that dried up some of the deal flow in private equity space. But it looks as though things have come back, broadly speaking, in the global market, the global private equity market in 2024. Still, of course, not back to 2021 levels, but have retraced some of the volumes that were lost throughout the course of 2022 and 2023. So that's the global setup. Now we're going to talk about the regional setup as well. And Rishi, I'd love to start with you, actually, because you know, you've been investing, your company has been investing in the region since 2007, a regional fund investing in the region. You've seen various cycles, various booms and busts, global and domestic. How do you see the landscape for PE investing now?
Sure. I mean, as you said, we were one of the early pioneers investing in the region. I mean, we are obviously from the region and arguably for the region as well, having started operations from this part of the world back in the early 80s. But it was really in around the 2007 timeframe that we started deploying capital in the GCC region and the broader MENA region. And you're right. I mean, you know, look, having gone through almost 2 decades of actual experience on the ground, deploying capital, but more importantly, managing a portfolio and monetizing it, delivering exits and capital and profits back to investors, we've learned a lot. And the underlying market actually has evolved a lot. So focusing on that first, I think it is fair to acknowledge that today the GCC region in particular sits at the crossroads of presenting a relatively attractive set of investment opportunities to private investors, or both private equity as well as private infrastructure and associated opportunities, even private credit going forward. And the reason for that is A, the economic diversification agenda that the regional leadership is pursuing, B, the fact that the currencies are pegged to the US dollar, and hence the volatility around that is relatively narrow, if non-existent. And 3, it's really driven by the fact that you have a real emergence of small and mid-sized businesses. And that's the big change. You know, when we started investing back in 2007, the only game in town was to invest alongside family-owned businesses. Today, there are many new SMEs, mid-sized, mid-market businesses that are getting formed in the region that are more than happy to take on outside capital as a value-added partner alongside them. And the market is deeper as a result. To invest, but more importantly, to exit through the public markets, through sales to strategic buyers, and so on. So that's really been the evolution that we have witnessed firsthand. The most important takeaway for us is it is critical to be local. You have to be plugged into the local ecosystem. You have to be part of the framework, the local, you know, social fabric, if you will, of the GCC. And that's what partners looking to deploy capital from the outside are looking for. And that's one of the reasons why we kind of get the benefit of, you know, a lot of investor interest in the region.
Yeah, interesting. So let me then pivot to Jad then, because we talked about it being critical to sort of get local perspective. And of course, you're coming from the angle of a global fund that is mobilizing capital regionally. First of all, how do you set about identifying long-term opportunities where you can mobilize capital into businesses that are also scalable and of high value?
So, look, I completely agree with what Rishi just said, which is you have to be local. And even though we are a global fund, Brookfield has actually been in the region since 1997 through many of our portfolio companies and even just direct investments since 2015. And what I would say, Jumana, to part of your question is that where we found that we can be most helpful to people in the region is at scale. And so you spoke about dry powder earlier and about how much there is in the world. But when you look at the region, actually, when it comes to dry powder for significant scale, there isn't actually that much. And so one of the things that, or one of the narratives that has come out in the Middle East over time was that, oh, but private equity deals are usually in the sort of mid segment. Whereas in reality, what we think is there's been a demand-supply mismatch. There's always a supply. There's always someone who needs a solution in some shape or form. But how many people globally have actually been investing in scale here? And so when it comes to finding long-term opportunities, I think the way that we've positioned ourselves is always just to be a partner of choice. To be a partner of choice in the region, if you want to get into some of the best businesses that there are here and to invest in them, you have to have a 1 + 1 = 3 mindset, not a zero-sum mindset. And so that's how we really approach it.
May, I've spoken to you many times over the years, and of course you run an advisory firm. We spoke around the time a couple of months ago that PJT acquired your company, De Novo, which I think also just underscores and underlines how much international focus there is on this part of the world because of the acquisition of your own advisory firm. So just talk to us about, why you think there is so much scrutiny now on Middle East and the investment prospects it offers.
Sure, thank you, Jumana. This is a perfect example of I practice what I preach. So in terms of looking at this region as a very interesting and a very important part of the world, in terms of its attractiveness, I think no more than now have we seen that. I've been now in this region for the better part, professionally at least, for the better part of about 20 years. And I've never seen what we're seeing today. Just the attractiveness of, on a relative basis, of our region relative to what's happening in Europe, which seems to be on a downward trajectory. What's happening in the US, which seems to be in its own kind of whirlpool since the elections or more recently. But we look at this region and GCC specifically, it's, if you want, a shining bright light in the middle of a more turmoil part of the world. And we're seeing in the attractiveness of the region, relatively speaking, not just to strategics, like a PJT is a strategic coming in and acquiring a firm like ours, and we're integrating into the global practice of what they're doing, because for us, it's about following our clientele, and they're going global. So if you look at the regional companies, the sovereign wealth funds, they're going global, and we wanted to go global with them. But also, if I look at my fellow panelists over here, each and every one of them has been a very big influencer in looking at investing here. They've been clients of ours, they've been counterparts to us. And the amount of activity that global private equity firms, not to mention regional ones, that have been looking at investments in this part of the world is more than we've ever seen. And so, and the sizes are getting larger, but also the opportunities are getting more broad. So between international private equity, between regional sovereign wealth funds that are acting like private equity, between local private equity firms that are actually looking to be more substantive and adding more internationals participating with them, I think we've never seen such level of activity as we're seeing now. For me, it's great. Because
I was going to say, it must be a good time to be an advisor.
Or my team, they get busy all the time. But it just shows that we are at that stage where we're of a global scale that we really haven't been in the past.
Yeah. Well, Khalid, let me ask you, because relative new players on the block, how have you... your fund, how has it emerged from the progress that we've seen in the private equity landscape over the last decades?
Thanks, Jumana. Obviously, we as Alpha Dhabi Holding, we're a relatively young company, listed on the ADX back in June 2021. And we've been quite active as platform builders since then, obviously looking for opportunities to invest in regional businesses and scale them to ensure that they can list on the ADX as well as part of helping them with their exit strategy. On top of that, our mandate is global, so we tie up with other GREs, we tie up with other strategic partners to try and enable those businesses to grow internationally, and not just grow internationally, but also bring the best-in-class businesses from the West, from Asia, into the Middle East, where we can tie them up with our ecosystem companies, and they can access new markets as well.
Yeah. Rishi, let me come back to you and just look at it from the investor's perspective. When you are investing into any high-growth economy, obviously you are going to get, by definition, high growth, but then it also perhaps comes with risks as well. These are nascent markets that we're talking about. They're not as sophisticated or as advanced in terms of capital markets as other advanced economies. What would you say investors are looking for when it comes to deploying capital into this part of the world?
I mean, first of all, you're absolutely right, spot on, Jumana. The nature of the markets over here is very much similar to emerging markets investing all over the world, and therefore it comes with some degree of excitement, really represented by the underlying growth characteristics of the markets, but it was also accompanied by an equivalent level of risk, which arguably for the GCC region in particular is somewhat lower than the typical emerging market. And I'll tell you, I referenced earlier, one benefit that the GCC market has relative to other emerging markets is that it is a dollar-linked market, right? Mm-hmm. So currency volatility is lower, and that has a big impact otherwise, potentially on the volatility around returns. That's one. Second thing is, unlike many other emerging markets, the GCC policy framework has proven to be relatively stable, right, through the course of the last several years, and more importantly, looking ahead into the future, driven by the regional leadership, driven by the economic diversification programs and visions that have been laid out in a pretty, articulate manner, right? Now, taking all of that macro tailwind, if I can describe it like that, into account, let's ask ourselves, where are the risks, right? Because it's not just one-way street over here. The risks continue to be on a couple of fronts. One is that the exit path is still not fully cemented yet, right? As we said, we are one of the oldest investors in the region. We've been there barely 2 decades, right? 2 decades in private equity, where the average hold period is 5 years, means that you've barely gone through 4 cycles as of now. And hold periods tend to be longer. It takes longer to exit a company. It takes longer to take a company public, et cetera. Secondly, because of the fact that the ecosystem itself is in the process of maturing and developing, you don't have that natural pipeline of private equity selling to private equity, selling to private equity, and so on yet, right? It's beginning to form. And my partners on this panel are part of that ecosystem. We are constantly engaging with each other, as May was saying, looking at opportunities that we can prosecute together or monetize together. But by and large, the most prevalent exit mechanism is still to take a company public.
Yeah.
Right? And that requires a maturation of the regional capital markets, the equity capital markets specifically. There are some parts, Saudi, UAE, for instance, where that is clearly happening. There is depth coming into the equity capital market, and that is very encouraging for us. But there is still a lot of room for growth and development over there. That's how I would frame the risk and reward.
Yeah.
Macro positive, but we need to continue to keep developing the exit pathways.
Yeah, and it looks like the ecosystem is beginning to slowly grow organically as well, or quickly grow organically, I should say. Jad, let me just ask you as well, because we hear that there's pressure from LPs for distribution, for monetization. How do you see the prospects for exits and for monetization, to pick on what Rishi was saying?
So, look, we are firm believers that if you buy the best quality assets, you're always going to find the buyer. That's just the fact of life. And it goes in every industry, not just in ours. If you have a company that generates strong cash flows, has growth over time, is cemented in its business, in its sector, chances are someone else thinks that's a good investment. And so, look, the ethos of Brookfield has always been we invest in the backbone of the economies. And when you're investing in the backbone of economies, you're effectively buying into what makes all of these economies run, which doesn't go out of fashion. And so whether it's we're going to sell to a trade sale or we're going to take it public, investors understand that, and they understand these businesses. We're not necessarily innovating in structures for that. And you've seen that across our portfolio. I mean, we have $13 billion invested in the Middle East today. And I would say that, earlier last year, we did the 49% divestment of ICD Brookfield Place. I'm not sure that there's been a third-party real estate transaction of that size before, but you found investors because they like the profile of that. They like the fact that it's cash yielding, that it has a cemented status. Same thing with the investments that we've done in Magnatian Network and hopefully the merger that we'll do with those. Those are absolutely unique assets. GEMS Education, same thing, absolutely unique and core to the infrastructure of the economies. And so we'll continue to do the same thing.
Yeah, May, how has the nature of your advisory process shifted alongside the landscape over the course of the years? And again, as some of these businesses become larger and much higher value.
So I'll tell you what I found interesting, sort of going back to what my colleagues were saying, is we're finally at a stage where there's a multitude of takeouts that one can look at. Again, if I look back 20 years ago, we didn't have a leveraged recap market, we didn't have an IPO market, we didn't have a secondary market, we didn't have many different exits that private equity at its core would need to have in its a portfolio of opportunities for them to come in and invest more proactively. So moving along today, what do we have? So when Brookfield entered into GEMS, they took out CVC. And that was a huge transaction that was done. Yeah. We had the privilege of working on it, but we had a huge transaction where we saw a large investment that came in from CVC 5 years ago of $1 billion that was taken out at multiples off of that through the new exit that came in and the investment that came in. And so we saw that there's a rotation of capital between private equity. That's something that's meaningful. If you look at even just the example of the panel that was just here right previously to us, Property Finder had GM Atlantic coming in and taking a stake in his business. You've seen, Brands for Less, they had a strategic coming in, but not because of the lack of private equity interest. There was a lot of private equity interest, but a strategic also came in. And then you have a multitude of other situations that are looking at IPOs as an exit metric for them as well. So when you think about where the universe has gone in our region, we're now in a great place, including banks that are coming in and re-leveraging transactions and allowing owners to take out cash. Usually banks would come in to just let you fund growth. Now they're letting you come in to leverage, to take money out. So this level of sophistication, the level of growth of our region has been tremendous, which means for us as advisors, and we look at all of these as tools in our toolkits. So when we act as fiduciaries on behalf of our clients, we need to maximize what the potential exits or the potential areas of interest for them. And today we have a lot more that we could play around with than we ever used to. Yeah. I think that's great. That's only healthy for our evolution of our region and where that's getting to. And that's why we're getting more and more international investors coming in and finding this as an attractive place to do business.
Yeah. Khalil, let me also just ask you about the momentum that's clearly in the space. What more would you like to see alongside what we were just talking in terms of market evolution to continue to support the PE ecosystem here in the region?
Well, thanks, Jumana. Just to also, expand on my colleagues here's points of view. We at Alpha W, we deploy at scale, right? So we've deployed since inception over 15 billion dirhams of capital. We've also exited as well last year, over 4 billion dirhams of exits. And these come in various ways, right? They come through IPOs, they come through divestments, strategic partnerships. And, for us, the main issue that we feel is we need more FDI into the equity capital markets. Today, the UAE is still an emerging market in terms of classification for the ADX and the DFM. In order to attract more liquidity, more companies need to list, and more liquidity needs to come into the existing large cap and mid cap names, some of which form part of our portfolio as well, right? So DAR, Pure Health, NMDC, Modon and the likes, obviously are very large caps in Abu Dhabi, but today do not enjoy significant liquidity, and that's part of why international investors have yet to come in at scale into the capital markets locally.
Yeah.
So part of this is starting to change with the ABBs that we see, the accelerated book building process that ADNOC Gas and ADNOC Drilling have recently undertook. So we see these as tools to increase liquidity in the capital markets that will be beneficial for us as principals, monetizing some of our long-term strategic stakes, but at the same time providing access to international investors to the UAE markets.
Yeah, it's interesting what you're saying about FDI, because at the end of the day, you know, the region doesn't exist in a silo. And Rishi, let me just ask you about, you know, geopolitical headwinds. I'm not going to ask you a political question, but you know, we are in an environment now where we're moving away from multilateralism towards, I guess, more fragmentation around the world, and I guess that will have ramifications on capital flows. How do you think the region stands to benefit or lose from this sort of realignment of the global world order geopolitically?
I mean, the short answer, Giovanna, is the region is no doubt one of the beneficiaries, from this polarization that we are seeing on a geopolitical scale, both in terms of trade flows and capital flows and other areas as well. And in particular, I mean, just double-clicking on that, I think the region has a unique opportunity, a moment in time almost, to establish itself as a leader on multiple fronts. One is geographically as well as geopolitically, it is one of the few parts of the world that can truly play a mediating role between the two sides of that coin, if you will, right? More importantly, as companies, as entire governments look to redistribute or restack their supply chains, the region is going to play a pivotal role in that supply chain reorientation as well, both because of its position, because of the fact that it is the supplier of energy to most of the world, and because of the fact that it is also a significant source. So we've been talking about investing in the region. Let's not forget, guys, that the region is a significant source of capital that is exported out for investment all over the rest of the world, right? In addition to the energy that is supplied to the rest of the world. And then last but not least, there are certain emerging sectors where the region is taking a true leadership position in, energy transition, for instance, being one. Even on the technology front, you know, as it relates to the AI ecosystem in particular, but the broader technology services and technology goods landscape, you see the emergence of the region as a true hub of activity, right? So all of that means that there is, at this point in time, we feel very strongly that the region is positioned in pole position, right, to take advantage of some of this fragmentation that is happening on global trade and capital routes.
Jad, do you share that optimism?
Absolutely. And I was just thinking, actually, that it's incredible that we spent all this time talking about how much activity there is here, and we never even mentioned that capital was flowing out of the region.
Yeah.
Usually that would be the number one topic that we would talk about, and I think that's only going to increase over time. I'll go back to what we were discussing earlier, which is, if you are a global investor today looking for a home for your capital, and you have an opportunity to invest in a market that has emerging market growth, but in dollar-denominated currency, you're going to put your money there without the complexities of the geopolitics. And that's what the GCC is providing today. And we're seeing that en masse. We're seeing that at the institutional level. We're seeing that at the personal level. And so I share the optimism.
Yeah. May, since the first two gentlemen answered that question and they were unanimous, I'm going to give you another question. A higher interest rate environment, how is that going to derail the overall momentum that we're seeing in the space?
Look, it's interesting because higher interest rates is causing less deployment of capital in places like Europe and other parts of the world. Over here, I don't think that's had as much of an impact because it's an over-equitized market, if you will. It's not one that the last inch of leverage is necessary.
Yeah.
And so we're seeing still that level of activity continue. And I think the one point that I wanted to mention that we hadn't sort of spoken about earlier is the emergence of also the sovereign wealth funds as a true means of private equity style investments into the region. I mean, historically, the sovereign wealth funds have taken their cash out and invested that externally. What we're seeing over the past 5, 6, 7 years that we hadn't seen previously is that they're now emerging their own asset class as a true investor in their own markets, and also as an investor into global funds, encouraging to come back and invest over here. Simple few examples with Blackstone, a $40 billion infrastructure fund was 50% capitalized by PIF, where they asked to come and put in $5 billion back into the market.
Yeah.
Similarly with BlackRock as well. And we're now seeing Mubadala being very active with Apollo, Silver Lake, Stonepeak, et cetera. I mean, the list is long. And all of them are coming back here and being part of that capitalization. Even Brookfield's Middle East Fund has gotten some investments from this part of the world as well. So what that's showing us is that irrespective of how we look at all of these different capital flows, interest rate environments, IPO environments, and what have you, we're seeing new sources of capital coming in that are not as interest rate reliant or as much focused on what that could mean for them. So I think, again, it looks really interesting because we're also getting international know-how coming into our home markets, backed up by sovereign investments as well behind the scenes to make it more
it's
proactive.
really interesting you brought up that point, because for those of you who were here yesterday, His Excellency the Minister of Investment, in his own panel, he was asked about the role of sovereign wealth funds, and I think there's a misperception perhaps that the more active role that sovereign wealth funds play, the more there's going to be a crowding out effect. But to your point, you see it actually as an appeal.
It's an enabler. We look at it as depends on the market. There's some market where they are actually crowding out, and there's some markets like this one where they're an enabler.
Yeah. Well, Khalil, let me round up with you, and you get the easy one. Just in terms of which sectors are you most excited about over the next few years, and how does that wrap into the overall UAE vision of growth?
Absolutely. So look, from an Alpha Dhabi perspective, obviously we're an investor in real estate, construction, infrastructure, healthcare, energy, financial services, and nature-based solutions as well. So we have a very wide sectoral remit. We're very excited in our core sectors as it continues to grow. The real estate sector remains strong for the foreseeable future. We foresee a lot of investment coming into financial services as well. We're very excited with the amount of wealth moving into the country, providing opportunities for more complex developed financial products, solutions, and a more sophisticated and larger financial sector. That's not just in the UAE, but regionally. So this is an area of interest for us. We also are long energy. So contrary to the rest of the world, we believe the last barrel of oil will be drilled here. And so we're invested with ADNOC in Enersol. That's a $1.5 billion platform that's going to bring technologies into the region to drill cheaper, cleaner, and faster, and add value to our companies here. And so we believe in diversification, but we also believe in our core sectors continuing to grow. So all in all, it's a very optimistic outlook for the region, for the medium term at least.
Yeah. Well, I guess we ended with the exact question that needed to be answered, which is that you are optimistic about the outlook going into 2020. It only took us half an hour to get there. Gentlemen and lady, thank you so much. That draws this panel to a close. Thank you so much.
Thank you.